It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Hello and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. A lot of really helpful information for you guys today. This week, Trump signed the biggest rollback of bank rules since the financial crisis of 2008. So we're going to talk about the Dodd-Frank reform bill that was passed into law this week and what that means for the real estate market and for you. We're also going to talk about first-time home sellers. We talk a lot about first-time home buyers, but not so much about first-time home sellers. So if you're considering selling your home, your first home, I have some really helpful tips for you. And we're going to also talk about how to avoid a low home appraisal and what to do if that appraisal comes in low. What are your options? And then finally, if you're considering selling your home, let's say you put your home on the market, you might run into a situation where a buyer or another agent starts to ask you, the homeowner, some questions. And we're going to talk about what answers you should give and certainly what answers you should not give if you do find yourself talking to the other side, the buyer, the buyer's agent. Now, if this is your first time tuning into this show is designed to help you better understand the current state of the real estate market, as well as help you become better educated in the process of buying, selling, and investing in real estate. So my name is Brian Beatty. I've been doing this show for about 5 years. I've been selling real estate for 12 years here in Charleston. My team and I have done about 1,000 transactions and about $500 million worth of real estate volume here in the market. So I take my experiences and knowledge of the market and I share them with you so that you can become a more informed consumer when it comes time for you to call a new place home. So let's get right into it, guys. If you want to contact me, if you're thinking about buying, selling, or investing in real estate, and you'd like to work with a top agent, my team would certainly love the opportunity to earn your business. I can be reached at 843-345-1273. That's my cell phone, 843-345-1273. Call or text that number, or visit my website, listingsincharleston.com. That's listingsincharleston.com. A lot of really good information on there, past versions of this show, which is also, of course, available on iTunes through my podcast, The Brian Beatty Real Estate Show. And on that website, listingsincharleston.com, you can search the MLS, learn more about myself and my team, who we are, what we do, what we sell. You can get more information on the current value of your home and all kinds of good stuff. And there are some free guides on the homepage for you to download if you're a buyer or seller. And we've also got a millennial guide. So listingsincharleston.com is the website. Now, earlier this week, President Trump signed the Dodd-Frank reform bill into law on Thursday, which is the single biggest rollback of bank regulations since that global kind of financial crisis, especially here in America in 2008. And so the bill is designed really to kind of ease the unnecessary burdens put on small and medium-sized lenders that were established back in 2010 when Obama signed the Dodd-Frank Wall Street Reform and Consumer Protection Act, which is a mouthful. But so before we kind of get into what the new bill achieves, let's kind of go back in time and briefly discuss the Dodd-Frank Wall Street Reform and Consumer Protection Act. And so Dodd-Frank, which is just what I'm going to call that now because that's just too long, Dodd-Frank was passed as a response, of course, to the financial crisis of 2008. And it brought really the most significant changes to financial regulation in the U.S. since the regulatory reform that followed the Great Depression. I mean, that's how much our country was in trouble just 10 years ago. It made changes in the American financial regulatory environment that basically affected all federal financial regulatory agencies and almost every part of the nation's financial services industry. So Dodd-Frank really was an attempt to kind of reestablish oversight and control, which was the big thing, control over financial institutions after, of course, 2008. So major banks went bankrupt, markets collapsed, millions of people were foreclosed on or lost their savings, available credit was drying up. The federal government fronted trillions of dollars to shore up the economy, and the Federal Reserve, of course, bought a ton of toxic financial assets and, of course, slashed interest rates to kind of stabilize the situation. So Dodd-Frank included new regulatory requirements for banks. It created the Consumer Financial Protection Bureau, the CFPB, expansion of oversight of hedge funds and private equity firms, which we're not going to get into too much here, and then increased bank reporting requirements and the so-called Volcker Rule. And for those of you that don't know, I'm sure most of you probably don't, but the Volcker Rule reduces the ability of banks to use kind of consumer and business deposits for speculative investments. And so the issue is without it, banks, without that rule, banks could fund risky investments with deposits. And if their bets went bad, then they just turn, to the federal deposit insurance to make good on those losses. So the problem with Dodd-Frank, well, there are several problems with it, but here are the big ones that relate to housing for the purposes of this show and our discussion. It limits the risk that a financial institution can take, which decreases its profit-making ability. I mean, in particular, the severe amount of regulatory compliance and the associated costs of adhering to these regulations has had a huge negative impact on community and regional banks, despite the fact that they didn't really take part in the recession. I mean, at least their impact was a drop in the bucket compared to these large financial institutions. And on top of that, banks were required to hold a higher percentage of their assets in cash, which decreases the amount they're able to hold in marketable securities, which limits, bond market making rules and so on and so forth. So fast forward to this week, and the Dodd-Frank reform bill eased restrictions on all but basically the largest banks. It raises the threshold from $50 billion to $250 billion, under which banks are kind of deemed too important to the financial system to fail. If anybody's ever heard, too big to fail, check that out. But by the way, fun fact, by raising the asset threshold to $250 billion, this law is expected to reduce the number of banks that are kind of subject to this heightened regulatory scrutiny from 38 all the way down to 12. It also eases mortgage loan data reporting requirements for the overwhelming majority of banks. It adds some safeguards, by the way, for student loan borrowers, and it also requires credit reporting companies to provide free credit monitoring services, which is really cool. Basically, it leaves the central structure of the post-financial crisis rules intact, and it exempts some small and regional banks from the most stringent regulations, and also loosens rules that were aimed at protecting the biggest banks from sudden collapse, basically. So overall, it's great news. I mean, it means that local and regional banks can now be more competitive when it comes to extending consumer credit and, of course, mortgages, which should make the entire industry more competitive, something that benefits you as a potential buyer. The regulations that are placed on small size community banks, they were terrible. And because it hindered small size home builders as well from obtaining construction loans. And that's kind of a big deal. The home building industry, by the way, is dominated by large corporations. Now that this bill has passed, small time home builders are now going to have better access to capital to build homes, which is a step in the right direction towards solving the kind of semi-serious problem we have of lacking inventory of available homes for sale. And kind of finally, this new bill requires Fannie Mae and Freddie Mac to consider the use of something called alternative credit scoring models, which could help borrowers with little to no credit get a mortgage. And so that's really interesting. And it's a good thing, but it's something that will be really interesting to watch, because obviously the last thing we need is to be extending mortgages to people that can barely afford them. So some big news this week as it relates to the Dodd-Frank reform bill. When we come back, I want to talk about first-time home sellers. Homeowners don't generally think about filling the shoes of a first-time home seller until they've decided to buy a home. So I want to give you some things to help you better understand the process, some things to prepare for, so on and so forth. So stick around. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. And again, if you want to reach out to me, you have a question, comment, or you're interested in buying or selling or investing in real estate, feel free to give me a call. My number personally is 843-345-1273. Again, that's 843-345-1273. You can call or text that number, or of course, visit my website, listingsincharleston.com. And I do also want to mention our incentive, of course, for all my radio listeners. If you're considering selling your home, we will pay for a free pre-listing inspection. It helps you determine what might need to be done to your property before we list. If you don't have a budget to make those repairs, we can account for it in our pricing. And if you do the repairs, then it helps us maintain your asking price and helps you sell your home for more money. Because the last thing we want is for you to get surprised by repairs you didn't know you had to make, and now the purchase of your new home or the money that you were planning on putting in the bank is now in jeopardy. So List With My Team will pay for a pre-listing inspection. So again, give me a call if you'd like more information on that, 843-345-1273, or go to my website, listingsincharleston.com, and stick around. We'll be right back.
Visit Brian Beatty's website at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on The Big Talker, 1250 WTMA. 1250 WTMA. Now, here's more of the Brian Beatty Real Estate Show on The Big Talker, 1250 WTMA.
Welcome back, Charleston, as the Brian Beatty Real Estate Show continues here on The Big Talker, 1250 WTMA, and of course through my podcast on iTunes, The Brian Beatty Real Estate Show. We just talked about the Dodd-Frank reform bill and the impact that's going to have on the real estate industry, but I want to talk now about first-time home sellers. You know, as I was mentioning, a lot of homeowners don't really think about being in the role of a first-time home seller until they decide to buy a new house. And usually the motivating factor is that they need to move due to work-related issues or needs of a growing family, and that generally involves, obviously, buying another house. And it's when the homeowners stop to consider the move that it kind of dawns on them that, yes, because they need to sell, they are now a first-time home seller and they need some help. And selling a home, of course, is very different than buying a home, whereas buying a home generally involves, emotions and feelings and all the memories that you're going to create in that new home. Selling a home typically centers around what listing agents like to call maximizing profit potential. Okay, this is a business decision. So I've got some tips for you if you're thinking about selling your home, whether you're a first-time home seller or not. These are going to be some great tips for you guys to take into consideration. And if I can help you with that, again, we'd love the opportunity to earn your business. I can be reached personally at 843-345-1273. That's my cell, 843-345-1273. Call or text that number. Or, of course, go to listingsincharleston.com to learn more about myself and my team and what we're all about. Listen to previous versions of this show. Contact me, search the MLS, find out how much your home is worth. Everything that you want real estate related is on listingsincharleston.com. So let me give you a few tips here, especially if you're a first-time home seller. And the first thing that I can tell you is to just price your home accurately. And obviously for this, you need to enlist the help of a reputable listing agent. I mean, I would never kind of blatantly say don't choose your cousin's sister-in-law, for example, but if there's somebody that's just kind of dabbling in real estate, my suggestion would be to go with somebody that's experienced. You're going to fare much better if you select an experienced real estate agent who sells a lot of listings, preferably in your area, and ask questions about, how long are they on the market? What percentage of the asking price are you getting? I mean, on my team, we're 19 days median on the market before our homes go under contract, and our homes get 98% of asking price. So we like those numbers, and they're very impressive numbers, but you have to, and I'll get into this in a tip a little bit later on, because it relates to your motivation to sell and how quickly you need to sell. But as it relates to pricing, your agent is going to analyze comps, and they're going to prepare an estimate of value, which we call a CMA, a comparative market analysis. Now, even though I just said that your goal is to maximize your profit potential, that does not mean choosing the agent that just tells you the highest price. This is perhaps the number one mistake I see sellers make, even experienced sellers, is they go with the agent that can promise them the highest price. I have news for you. Your listing agent can do very, very little to control the price that your home sells for. And I know that sounds counterintuitive coming from a real estate agent with a real estate-based radio show, but the fact of the matter is a buyer is willing to pay what they want for your home based on perceived value, right? That's why we look at the comps. That's why we analyze the comps. When I sit down with a seller, we spend the majority of our time talking about the market, talking about positioning, talking about, this home down the street and what they had and what yours has that might be different. And what's the value comparison on those things? If you have a much nicer kitchen than theirs, that's incorporated into your value. If they're on deep water and you're on a tidal creek, that impacts value. You have to look at all of those little things that impact perceived value and actual value. We're going to talk about appraisals later on in this show. But you have to really dissect those comparable properties. If an agent comes in and they shoot from the hip and they, oh yeah, it's a $500,000 house all day long, and they're not taking the time to prove it to you, it's a red flag, okay? So I could talk forever about this, but I'm going to move on. The second tip I have is to insist on the best marketing plan. It's just too easy these days for agents to put a sign in the yard, put it on the MLS, do an open house, post your home to their business Facebook page, and then wait for other agents to show it, help you negotiate a contract, and then get you to the closing table. It's a seller's market, which means that homes are in higher demand than usual. They're selling faster than usual. And as a result, a listing agent's job is perceived as easier, which is why so many people are kind of flocking to real estate schools right now to get their real estate license. The problem is it's not as easy as it looks. Not to sell a home for top dollar. And inclusive of that, offer incredible customer service throughout the entirety of the transaction and be available to you and communicate well and have all the tools and systems and support and marketing necessary to give you the best chance possible to sell your home to the highest bidder. I mean, when I sit down and we talk about marketing and everything that we do from the time they sign on the dotted line until the time that we close on their property, we usually have more than 50 active marketing campaigns running simultaneously for our properties. We generate a massive amount of interest on them, and we've learned that over time. We've developed a marketing plan. We've perfected it. Or at least we believe that it's perfective. I think the numbers, kind of speak for themselves. But when we talk about marketing, you need to be asking the question of what are you going to do outside of putting it on the MLS, outside of relying on other agents to show your property, outside of what your brokerage offers. What are you personally committing to me to do to help me sell my house? And you are going to ask that of multiple agents if you're interviewing agents. Compare, contrast, and don't just go with the agent that goes in there and it's just feature. They tell you everything that they can do, and you haven't spent any time talking about why you're selling. And that's tip number 3 is make sure your agent understands why you're selling, what that will accomplish for you and your family, and make sure that their goals align with yours. Agents will walk in, it's all about them. They don't ask you any questions. They don't really seem concerned about anything but getting the deal done, getting the commission check they're going to earn once your home has sold. See, I mean, in our industry, from a realtor's perspective, there are 2 types of people. There are clients for life, and there are just transactions. And there are so many agents out there that are just focused on the transaction. It is a true, burn and turn. It's, I'm going to sign up this person. I'm going to do everything that I can to help them get their home sold. But it's a one-size-fits-all approach. If it works, great. If not, oh well. My job is to get as many listings on the market that if a few of them don't sell, it's okay because I have a buffer of other listings that might sell. And oh, by the way, if it doesn't sell, that's probably okay too, because at least I'm going to get some buyer leads from it. So you have to be really careful with these agents that come in and they just give you the whole song and dance and they're this big cheerleader for themselves and they haven't taken any time to connect with you. I'm telling you right now that is going to lead to a troublesome relationship if your home isn't sold in the first few weeks. And you never know. I mean, again, it's a seller's market. They might get lucky. They might sell it quickly. There's certainly a better chance of that happening now than several years ago. But you're going to start to ask yourself some questions, 3-4 weeks down the road if that home hasn't sold. I feel like my agent and I aren't on the same page. I'm always having to call them to get information. They're not sharing feedback with me from showings. We didn't even really talk about why I need to sell this house. It's just on the market. You need to connect with your agent. They need to be as invested in selling your home as you are. Okay? That's a big one. Tip number 4 is to trust, but verify. And what I mean by that is when you're working with the real estate agent, don't be afraid to ask for references. If they don't have references, run. Big red flag. If they don't have references, watch out. That's not a good sign. You can ask for testimonials. If you actually want to speak to a previous client, so be it. The agent should be more than happy and should be proud to give you that information. Another instance of trusting but verifying is to review your listing online. When we put our properties on the market, there's a whole process we go through to make sure that the copy that people read is as accurate as possible, that it's catching the buyer's interests. We're talking not just about the home and the bedrooms and the bathrooms and the square footage and the hardwood flooring. We're talking about the area and the lifestyle and what it means to live in that home. All of those ancillary benefits. Agents really struggle with that. It's, when you read these listings online, it's just feature, 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 feature. They're not taking that opportunity to connect with buyers. This is an emotional purchase. Let's play to the emotion of the purchase. So review your listing online. Make sure all that information is accurate. I can't tell you the number of listings we have taken from other agents and sold that, had it on the market for 6 months. It didn't sell. The seller's frustrated. They then reach out to another group of real estate agents. We get the business. We get their home sold. And we're looking at their listing. And there's a bunch of stuff that needs to be changed because it's just flat out inaccurate. Never mind it being kind of poorly written, or the photos weren't professionally taken, or the marketing was lackluster. Sometimes there are just serious errors that need to be fixed that likely caused an issue for that seller when it was on the market previously. So trust but verify. And the last thing is to, review their marketing materials for your home and then make sure they do everything they said they were going to do. In my opinion, when you work with a real estate agent, you should be able to trust that real estate agent. That's the best type of relationship that we can form, is one based off of trust, where they call me and they say, Brian, what should we do? And they know that I'm going to give them an honest answer. They know that I have their best interests in mind. But you can't create trust without accountability. So make sure that everything they say they're going to do is going to be done. I have all the time walked into properties and agents lay out this massive list of things that can be done to market homes. And it's just like they've kind of grabbed every tactic available to a real estate agent to try and market a property for sale. They win the seller's business. And then for those properties that don't sell, the seller said, they didn't do half the stuff they said they were going to do because they're not verifying it. There's also no accountability there, which means there's no trust there. So trust but verify. And then the last thing that I want to say, if you're a first-time home seller, but really any sellers, don't wait until the last minute. If you have time to look for homes to buy, you have time to look for a real estate agent that can help you with the process of selling a home and buying another, especially if you have to sell your home to buy another. Almost every time I have rushed into a decision in real estate, it's hurt me, not helped me. As an example, if you want to be on my real estate team, you're going to have to go through 4 personal interviews, a group interview, a reference check, and take a personality test. And it's going to take several days, cumulatively probably a dozen hours. It's probably easier to get a job at the majority of corporate companies than it is to join my real estate team. Why? Because I expect a lot out of my agents and my staff. And I have an amazing culture in my company, and I fight to protect it so that we can feel 100% confident when we say, our customer service, our professionalism, our results-oriented approach is truly second to none. And so for you as a seller, this is not one of those times in life where you're just going to say to yourself, it's good enough. Expect more and demand professionalism. And if you don't get it from that person, find someone else who will give it to you. But don't wait until the last minute. Make sure that you've got a plan, and let's take the time to ensure that that plan is going to work correctly and fulfill the goals that you have as it relates to selling your home and potentially buying another. So if you have questions for me, if you're thinking about selling your home, whether you're a first-time home seller or just selling in general, or maybe you want to buy a home, feel free to reach out to me. My team and I would love to help. My number is 843-345-1273. Again, that's 843-345-1273. And of course, my website, listingsincharleston.com, listingsincharleston.com. And of course, we are offering a free listing inspection, pre-listing home inspection. That's what I'm going for. If you choose to work with my team, it's going to help you, I promise, and it will save you some money. It's at our cost, okay? So listingsincharleston.com or 843-345-1273. We're going to take a break and come back. We're going to talk about appraisals. What happens if it comes in low? What are your options? How do we prevent that from happening? So all that and more as the Brian Beatty Real Estate Show continues right here on the Big Talker 1250 WTMA.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA. 1250 WTMA. You're You're listening to the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
The Brian Beatty Show continues here on the Big Talker, 1250 WTMA. Always like to take a little bit of time and just say thank you to those of you that reach out to me and entrust me with your real estate needs, whether it's buying, selling, investing, or we have a lot of people that just call us with general knowledge questions. Hey, I need a reputable contractor, or hey, I have a question. Can you help me? We're happy to do that for you guys. Feel free to reach out to us. My number is 843-345-1273. That's my cell. It's not this radio show line. It's 843-345-1273. Call or text that number. Or, of course, go to my website, listingsincharleston.com. So I want to talk now about how to avoid a low home appraisal and what to do if it does come in low. And so buying and selling real estate, it's just never easy as easy as it looks. Even when two parties agree on a price and other terms, the deal can still fall apart for a variety of reasons, including a low appraisal. So here's an example. The seller lists their home for $350,000. After reviewing an offer, they accept $325,000. But 2 weeks after they accept that offer, the appraisal comes in at $300,000. So how do we make up that $25,000 difference? We're under contract for $325,000, but it appraises for $300,000. So in this scenario, the seller, they've already come down off their price $25,000, and it's most likely that they're not going to be interested in dropping the price any further. And the buyer might not have the cash necessary to make up the difference. And so the result is that the deal falls apart. So when an appraisal falls short on the agreed upon purchase price, whether it's caused by market conditions or the condition of the home, both sides kind of find themselves in this unplanned predicament. And this scenario is obviously more common in a declining housing market, but it can happen at any time. And we deal with this, unfortunately, from time to time. But here's how you can protect yourself as a seller. To avoid the headache of a low appraisal that could obviously threaten to delay or even derail your home sale, I would consider getting an appraisal beforehand to help set your price. Now, obviously, real estate agents are typically very good at determining value, and it's going to depend on the agent that you choose. I mean, if you're working with an agent like me that's doing nearly 200 transactions a year, we don't really need to do that. But if you have an extremely unique property and comps are just really hard to find and it's a bit of a guessing game as to the price, an appraisal might be a good idea. Now, when you get that appraisal, you're going to provide the appraiser with a list of upgrades and repairs that you've made, the date that you made them, and the associated cost of those upgrades or repairs. But appraisers love that kind of information. And the last thing you want to do is assume that the appraiser knows everything there is to know about your house. So what happens if the appraisal comes in low? Here are the options, basically. Number one, the buyer brings the excess cash to the table to bridge the gap between the appraisal amount and the purchase price. So if you're under contract for $500,000 and the appraisal comes in at $480,000, that means the buyer has to come up with $20,000 in cash, since $480,000 is the max the lender can finance. So that's option one. Option two is obviously the seller can just come down on their price. So in that scenario, the sellers would reduce the purchase price by $20,000 to sell it for the appraised value if the buyer doesn't have cash or doesn't want to come up. Or, of course, the buyer and seller can just negotiate. The buyer comes up a little, the seller comes down a little, everyone moves forward with closing. Or, of course, neither party budges and an agreement can't be reached, then the deal falls apart, which is obviously the worst case scenario. But the fifth option is to challenge the appraisal. So if you're going to challenge the appraisal, first and foremost, you have to give the appraiser a reason to change their opinion. So many people just say, you're wrong. And I've got news, folks. That tactic isn't going to yield you a new appraised value. To get a second look, you have to provide the appraiser with different data that is different from the data they've already used. So read your copy of the home appraisal with your agent. Then you have to consider whether you can offer really the most single persuasive item, which is a new comparable property. And a comp in the real estate world is just a point of comparison, right? The best way to know what a house is worth, the argument goes, is to just compare it to a similar home that has recently sold. And you adjust the price up or down to compensate for differences, and then you'll know what your home's value is. And it's obviously a lot more in-depth than that, but that's the process. And so if a similar home in your neighborhood recently sold for more than your appraisal, especially if the sale took place after the appraisal, you bring that to your bank's attention. And of course, you want to point out poor or missing comparisons. If you're looking at the comps on the appraisal that the appraiser used, he or she might not know all the homes in your neighborhood that have sold recently. The appraiser is only going to find comps that are listed in the MLS. If a home changed hands without ever being listed and it's similar to yours and it's sold for more than the appraiser said your home is worth, then that's new information the bank and the appraiser should see. And of course, if you've got short sales and foreclosures in there, which we don't have very much anymore, that can, of course, throw off appraisals because it's a distress sale, and they might be able to throw that comp out. Hey, that home may have sold for less, but there was no kitchen in it, right? It's tough to find comps, by the way, for unique properties. And so that's why I was saying earlier about this idea of, buying an appraisal beforehand to help justify your value. If your property is unlike the others in its neighborhood or general area, look at the comps the appraiser is going to use. If there are any other comps that are arguably more appropriate, then that's good information to know. And if properties kind of rarely change hands in your neighborhood, that's another potential problem. Comps should be properties that have sold preferably within the last 90 days or so. I mean, they can go back 6 months, but if your appraiser uses older comps, because of the market dynamics, they're going to need to adjust for those comps, hopefully upward. If something sold 6 months ago, reason stands to believe it's that comp 6 months ago, which was put under contract 8 months ago, because it takes 2 months for a property to sell, is now worth more today than it was 6 months ago. Follow me? Okay. Another thing here with regard to challenging appraisals is to highlight the changes you've made to your property. And we talked about this by providing a list of things that you've done to your property. A new kitchen, redone bathrooms, updated, decor, not pillows and sofas, but like flooring. Would be a big one. Updated roof, new HVAC, new fireplaces. Point them out and detail, when you did it, how much it cost, so on and so forth. If after the appraisal, if the appraiser comes back and they see that they missed something, you're going to let the lender know, and hopefully they can incorporate that into the appraisal. Just remember, though, that the cost of new and upgraded home features rarely yields full value compared to the cost unless you've replaced or upgraded something that was at the end of its useful life. In other words, this is kind of a silly example, but if your roof is only 4 years old and you put a new roof on it, you're not really going to get credit for having a new roof. Okay? Now, if your kitchen was from the 1960s and you just put a nice kitchen in there, yeah, you're going to get some value for that. But the last thing that I want to say with regard to appraisal is just seek a second opinion. You can attempt to kind of sway your lender to revise the appraisal by getting one of your own. And they may be able to find problems with that home's appraisal and then send the notes to the lender and seek that the initial appraisal issue a revision for the bank to order a new appraisal. Getting another opinion, by the way, doesn't guarantee success. I just want to say that. But it has worked for me in the past on multiple occasions, probably a few times a year, actually. And yes, an appraisal is going to cost you some money. It's typically a buyer cost. It's going to cost you a little money. But if you pay for one and it saves your deal or prevents you from reducing your sales price, then it was worth the expense. But in the end, you may or may not be able to get the value changed. The appraiser has to answer to the underwriters. And the real deal here is that they've already been paid. So there are plenty of them that frankly just aren't that willing to change the value. But if you have a home that's unique, if maybe you've been through this process before, you tried selling, it didn't work out, and now you want to sell, or if you're just thinking of selling in general, feel free to reach out to me. We'll walk you through this process. My personal number is 843-345-1273. Again, that's 843-345-1273. That's my cell. Call or text that number. Or reach out to me online at listingsincharleston.com. That's listingsincharleston.com. Stick around for our final segment here on the Big Talker 1250 WTMA and the Brian Beatty Real Estate Show.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on the Big Talker 1250 WTMA. 1250 WTMA. Now, the Brian Beatty Real Estate Show continues on Charleston's Big Talker, 1250 WTMA.
Welcome back to the final minutes of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. And of course, through iTunes, through my podcast, the Brian Beatty Real Estate Show. I want to talk now about, let's say you're selling your home and you bump into the buyer or the buyer's agent and they want to ask you some questions. Well, here are 10 answers you should never give. You know, why are you selling your house? Might seem like a perfectly innocent question from home buyers, but I have to tell you to watch out for this, because if you're the home seller they're asking, this is one of the diciest questions you can answer. And the reason is pretty much any explanation you give is bound to contain revealing information that these home buyers are going to use against you, which is going to compromise your negotiating power. You know, real estate is a game of poker. You never show your cards. And home buyers are looking for any indication possible that you'd be willing to accept an offer that's below your list price. And the best thing to do, of course, is just to let your agent do all the talking. That said, there are times when you might still interact with home buyers. Let's say they arrive early for a showing, or let's say they kind of linger at your house until you return. If that happens, and if the buyer asks you why you're selling, and this, by the way, applies to for sale by owners as well. This is a really important segment if you're a for sale by owner, but it applies to everybody selling your house. But if you run into a buyer or a buyer's agent or really anybody, and they ask you why you're selling, you want to have a short, neutral response prepared in advance. And you want to say something like, we love this home, we're just ready for a change. And that's it. That's all you have to say. And then don't say anything else, because I don't think most people are going to have the gall to say, but why? Why are you selling? Because then that's desperation. And that's obviously them trying to go after your motivation. So that's the good answer. What's a bad answer? Well, there are several, and all of them, might seem rather harmless. But again, agents and buyers only ask that question to uncover your motivation to sell and your willingness to accept less money. So let's kind of play out some scenarios here. And I'm sure that there are plenty of people listening that have given one of these answers before, and now you know. But if you're going to sell your home, you're planning on putting your home on the market, this is some educational material to make sure that you don't give away the farm and end up accepting less for your home. And so the first kind of standard answer is, I got transferred from my job. And this is one of the most common reasons why people, sell their home. It's about 17% of why all people move, according to some surveys. But revealing this to a home buyer could make them think that you're desperate to sell and that you need to sell fast, and in turn might lead them to believe you'd be willing to accept or look at a lowball offer. Okay? Another answer that I've heard from a lot of people is, our family just needs a bigger home. We've got more kids now, we need more space. So if you're trading up, don't relay that to the home buyers. And here's why. You don't want to give buyers the idea that your house might not be big enough for them either, right? Pretty simple. But again, we're kind of going after the mind games here that they're trying to play. And the last thing you want to do is give them information that's actually going to harm you. Another answer that sellers typically give is, hey, now that our kids have kind of left the nest and they're off at college, we're ready to downsize. We don't need this much space. And downsizing makes total sense for empty nesters and retirees and maybe even families at times. But you don't want home buyers to think that your house is too large and difficult to maintain. Maybe they're more comfortable with 2,500 square feet and they're looking at your home and you're 3,200 square feet. You don't want them to think, we don't really need this much space either. Maybe they would have liked that space had you not said anything. Another answer I hear is, we need a smaller mortgage payment. We don't need to spend this much on this big of a home. And there's a couple reasons why that response is just a flat out bad idea. But first, you don't want to give the impression that the house is too expensive or overpriced. And secondly, you don't want home buyers to presume that your finances are in such poor shape or that you'd accept a lowball offer. I mean, never, ever, 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 ever discuss finances with the other party, period. Never, ever. Okay? Or you might say something like when someone asks you, why are you selling? You might say, we've already bought another house. If you want top dollar for your house, do not divulge that you've already purchased your next home. It makes that home buyer think that there's a sense of urgency now and that you have to sell quickly, which is a valid assumption because most people can't afford to carry two mortgages at once. They're going to sense that desperation, and having now known that, they're going to offer you less, or they're going to play hardball with you when negotiating on your house because they know you don't have the options that you'd like because you're in an uncomfortable situation because now you have two mortgage payments. Another might be that, we're moving out of the area. We're kind of moving out to the country, want some more privacy. We want a quieter neighborhood. And my advice to you on this one is just to steer clear of saying anything that could kind of paint the neighborhood in a negative light. Even saying the area is quiet could backfire, quite frankly. You don't want to, you don't know what a buyer wants, is the bottom line here. I mean, for instance, some people are drawn to areas with kind of a hopping nightlife and the noise that entails, or at least a place where the streets aren't, barren by 7:30 p.m. They might want some of that stuff. But you don't want to give the impression on the same token that it's a really noisy area and that, they're not going to be able to have a sense of privacy there. There are very few homes that I've walked into where there's just hardly any privacy. I can't actually think of one off the top of my head where I walked into a home and was like, oh, there's no privacy here. I think the kind of standard rebuttal to that would be all these new construction communities where the home is right on top of one another and you can hand your neighbor a roll of toilet paper from the window. Different strokes for different folks. Just don't say anything that could potentially paint that neighborhood in a negative light. Another bad answer that sometimes sellers give is we need to move closer to our parents and help take care of them. Or, we're moving closer to our parents so they can help us take care of the kids. Whatever the case might be. A lot of people move closer to family, and in some cases, it's just out of necessity, right? But there's no need to share that information with homebuyers because it's going to suggest that there might be some sort of urgent or medical situation that you need to tend to, and you have to sell your home now. You don't want to give them the idea that there's a sense of urgency on your end associated with selling unless you truly have a sense of urgency and you're okay with telling the buyer, hey, we're motivated to sell. We need to get this done. Make us an offer. We'll take a look at it. We'll do the best we can to reach a fair deal. There are ways of doing this, by the way, of kind of showing that, hey, I want to sell my house. I'm ready to go, but I want a fair price. There are ways of doing this without giving away the farm, without kind of showing your hand, as I was saying earlier, in this poker hand of real estate. Just be careful. And again, let your agent do the talking. Make sure, of course, that your agent knows what in the world they're doing. If you're working with a new agent, this might not have been something they've learned yet, quite honestly. And it's a big deal. Because everything we say, everything we do, everything we don't do potentially has an impact on the value of your home and the experience you receive when selling a property. Now, you might also say to the buyer, I got some back problems, or we're just getting older. It's too difficult for us to climb these stairs. And a lot of home sellers move out of 2- and 3-story homes for health-based reasons, and it's understandable. But you don't want to draw attention to the fact that there's a bunch of stairs throughout the house, since it might scare off older home buyers or home buyers with young children. And one final two more things for here that I can think of is our utility bills. It's just too much to maintain this home. Too much utility bills. And energy efficient homes are kind of all the rage nowadays, which makes sense when you consider the homeowners spend, I think the average is about $2,000 a year on energy bills. Man, I wish I spent $2,000 a year on energy bills. Anyways, but some home buyers, they still overlook utility costs when they go to buy a house. So the last thing you want to do is draw attention to the fact that your gas and utility bills are really expensive. Now, they might ask for that information anyways, and of course, you're going to divulge it. You're going to be fair and honest, and you're going to give them the right information. You're not going to discard that information, but why bring it up if you don't have to, right? It's not being unethical, of me to say that. You don't need to bring that up, but you certainly need to answer the question correctly if asked of you. And the last thing is, hey, this house is just it's just too much to maintain. The yard is too much. House is too big, whatever. Nobody wants to buy a money pit, right? So even if you're selling a clear fixer-upper, don't mention maintenance costs to home buyers. Also avoid talking about repairs, by the way, that you just never got around to making, like repairing the bathtub caulking, as well as big projects like replacing the 20-year-old water heater. All the reasons home buyers are going to think of to offer you less money. So when you're selling your home, just be really careful with regard to what you're saying and how you're saying it. Let your agent do your talking for you, and make sure that you're working with an agent that's truly experienced and is committed to protecting you and your confidentiality and your bottom line. And if that's something I can help you with, feel free to reach out to me. We'd love to earn your business. I can be reached at 843-345-1273. Again, that's 843-345-1273, or visit my website, listingsincharleston.com. Thanks so much. Enjoy your weekend, and thanks again for tuning in to the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.